Welcome to the PowerOptions tutorial for the Covered Call Quick Find tool. There are many investors in the market today who are still of the buy and hold mentality. They are holding on to shares of stock, hoping those shares will rise in order to realize a profit. Every day we hear these types of investors ask, "Why would I sell a call against my shares and agree to give up my stock at a set price?" Well, if you can forgive us a slight breach of etiquette, we tend to answer that question with another question. Do you know how much money you are leaving on the table? If you are holding shares of stock in your portfolio and you are not trading covered calls against them, you are essentially leaving money on the table. The PowerOptions Covered Call Quick Find tool will allow you to quickly see how much money is sitting on the table that you are not currently taking advantage of. The Quick Find tool will help you compare the risk-reward value for different strikes and evaluate those positions whether you're slightly bullish, slightly bearish, or slightly neutral in the current market situation. To access the PowerOptions Covered Call Quick Find tool, simply direct your browser to www.poweropt.com. If you are currently not a subscriber or do not have a 14-day free trial, simply enter in your first and last name and your email address in the spaces provided, and then click the Start My Trial button. We will promptly send you an email with a user ID and password so you can start using the PowerOptions suite of tools. If you already have a current subscription or you are on a 14-day free trial, simply click the client login link on the main home page and then enter in your user ID and password to access your PowerOptions account. Once we have logged on to our account, we will click the Covered Call Strategy tab on the main tab menu feature. From the Covered Call tab, we will access the Quick Find tool by either selecting the link in the submenu or selecting Quick Find from the available tools in the Covered Call Tools section. Once we have accessed the Quick Find tool, we'll be prompted to enter in our stock symbol, the number of shares we are currently holding, and our initial stock sentiment, whether we are neutral, slightly bullish, or slightly bearish in the current market. For this example, let's say that I own shares of Hewlett-Packard. If for whatever reason you do not have access to the stock symbol, simply click the Lookup Symbol link next to the Enter a Stock Symbol field, and you'll be able to search for the stock symbol by entering keywords of the company name and searching all optionable stocks to find your symbol. Once I've entered my symbol, I will now enter the number of shares that I am holding. For this example, we will assume that I own 1,000 shares of Hewlett-Packard. Now I can enter my initial stock sentiment. Whether I'm neutral, slightly bullish, or slightly bearish, I'll simply select my sentiment. For this example, we'll stay with neutral, and then I will click the Submit button. The PowerOptions Quick Find tool will now show me the potential calls I could sell against my 1,000 shares of Hewlett-Packard, and it will show me the current money on the table that is sitting out there waiting to be claimed that I might not be taking advantage of, and it will also show me my potential profit I could make on the position by selling that call, and how much protection I will receive by selling this call against my shares of stock. Although I selected a neutral sentiment for my shares of Hewlett-Packard, if I was neutral but slightly bullish, the PowerOptions Quick Find tool is showing me that I can currently generate $600 of income right now by trading a covered call. I could sell 10 contracts of the December 52.5 strike option against my 1,000 shares of Hewlett-Packard. Remember, one option contract typically represents 100 shares of stock. Since I own 1,000 shares, I could sell 10 contracts of the December 52.5 call. Even though I generated, or I could generate, $600 of income right now by selling the 52.5 strike call, if the stock rose and went above $52.5 in the next 20 to 30 days by December expiration, I could realize a profit of $2,370. This profit includes the initial premium I received by selling my 10 contracts and the appreciation I made from the current stock price to the 52.5 strike price that I sold. In addition to generating $600 of income and having a potential profit of $2,370, by selling this call against my shares of stock, I could also generate a 1.2% downside protection. This means that within the next 20 to 30 days, my shares of Hewlett-Packard could drop 1.2%, and I would still be at my general cost basis for my stock. If I was very neutral on Hewlett-Packard, and I did not expect the stock to move that much within the next 20 to 30 days, I'm shown that I could sell the December 50 call and generate an income of $1,700 right now. Again, if I do nothing and I simply hold my shares of stock, I am leaving $1,700 on the table. If the stock stays above $50, I would generate a profit of $970. The stock was trading above $50 on the third Friday of December, the December expiration date. My shares would be called away from me. The premium that I received, minus the difference of the current stock price to the 50 strike call, would give me the profit of $970. This potential call would also give me 3.4% of downside protection. This means that by selling the December 50 call, not only would I generate $1,700 of income right now, but I would also be protected if the stock dropped as much as 3.4% within the next 20 to 30 days. If my market sentiment was slightly shaky, and I was afraid that my shares of Hewlett-Packard might decline over the next 20 to 30 days, I could sell the in-the-money 47.5 strike call and generate $3,500 worth of income right now.